Hi, I'm Garth Drinkwater from Small Business CGT Concessions Specialists, and I'm going to talk you through an overview of what the Small Business CGT Concessions are. First of all, let's look at their purpose. The purpose of them is to help business owners to reduce, defer or eliminate capital gains on the sale of their business or business assets. And this doesn't have to be a sale to a third party, it can be an internal restructure where you're moving assets around a group. One of the reasons they were introduced is to help business owners save for retirement, because most business owners plough a lot of their available cash back into the business and not separately into superannuation like most employees do. So let's have a look at the concessions. There are 4 concessions. The first is the Small Business 15-year exemption. The second is the Small Business 50% reduction. The third is the Small Business retirement exemption, and the fourth is the Small Business rollover. The Small Business 15-year exemption is the best of the concessions. Where it applies, it can eliminate the gain entirely. The Small Business 50% reduction basically reduces the capital gain by 50%. The Small Business retirement exemption can reduce the capital gain by up to $500,000 for every relevant individual which can access that concession. In most cases, that can eliminate the capital gain entirely. The last of the concessions is the Small Business rollover. Where it applies, any residual capital gain can be deferred for at least 2 years. The deferral can be even longer where you acquire a suitable replacement asset, in which case the gain is deferred until that asset either is sold or ceases to be suitable. So let's have a look at the requirements that you need to satisfy to access the concessions. There are basic requirements which have to be satisfied to access all of the concessions, and there are some specific requirements in relation to accessing the Small Business 15-year exemption and the Small Business retirement exemption. For now, we'll just focus on the basic requirements. The basic requirements are that you either have to satisfy the CGT Small Business Entity Test, which is a $2 million turnover test, or the maximum net asset value test, which is a $6 million net asset value test. Now, both of these tests are applied against the taxpayer and the taxpayer's connected entities and affiliates. So it can be a broader range of entities which are brought into these tests. The next requirement is the active asset test, and that basically tests the connection between the asset and the business carried on, making sure it's a suitable business asset. There are also some additional requirements in relation to capital gains made on shares in companies or interests in trusts. There's some further requirements where we're dealing with rights to income or capital in a partnership. If you'd like to know more, just jump on our website and get in touch.